What is Forex? Forex is the exchange of two currencies, where you pay with one the price of another. A simple example of this is when you are in another country and you want to exchange your currency for the local currency of that country. Unlike stocks or commodities, Forex trading is not done on markets, but is exchanged directly between two parties in an over-the-counter market. The Forex market is established through a global network of banks spread over 4 main centers in different time zones: London, New York, Sydney, and Tokyo. Since there is no physical place through which trades are processed, you can trade Forex 24 hours a day. Forex is a portmanteau of foreign currency and exchange. Foreign exchange is the process of changing one currency into another for a variety of reasons, usually for commerce, trading, or tourism. According to a 2019 triennial report from the Bank for International Settlements, a global bank for national central banks, the daily trading volume for Forex reached $6 trillion in 2019. There are 3 different types of Forex markets. Forex spot market. It is the physical exchange of the currency pair, which takes place at the exact moment in which the operation is settled or, after a small margin of time. Forex forward market. A contract is established to buy or sell a fixed amount of currency at a certain price, and whose expiration takes place on an established future date or within an interval of future dates. Forex futures market. A contract is agreed to buy or sell a certain quantity of a certain currency at a set price on a fixed date in the future. Unlike a forward, a futures contract is legally binding. What is a broker? The main function of a financial broker is to guarantee the correct functioning of the market. It also provides a platform for traders to trade through. There are different types of broker: business, stock, energy, customs, or real estate mainly. Brokers that operate in stock markets usually have simple systems to open a trading account and deposit capital, because they are aimed at the general public who use it to manage their private investments and companies and are accessible to everyone. While it is true, they exist with different levels of specialization. What is a currency? In the foreign exchange markets, currency purchase and sale transactions are carried out every day based on the interest that currency has for a subject, so it is common for them to fluctuate, to change in value. Like the stock market, the interest or disinterest in a currency makes it appreciate or depreciate. If we want to trade with China or have investments in the United States, we will have to acquire yuan or dollars, respectively. And the volume of purchase and sale determines the value of one currency with respect to another. This is why the value of a pip in Forex for a standard lot is always equal to 10 of the currency, except in currency pairs where the Japanese yen is the counterpart currency, in which case the value of the pip is 1,000. What is a take-profit order? The take-profit order is set by the investor who owns the securities account. The take-profit order can be buy or sell, depending on whether the initial operation is a short position or a long position, respectively. The reason why take-profit is used is not to let a sudden change in the market leave the investor or trader without benefit. So, what is a stop-loss order? It is the investor who sets this price level through his broker, thus establishing the maximum level of loss that he is willing to assume. Thanks to these limits, we cut the possibility of suffering greater losses if the stock continues to fall, although we also lose the possibility of benefiting from the rises if the stock recovers later. What is a limit order? Limit orders allow you to specify the minimum price you want to sell at or the maximum price you want to buy at. There are 2 types of limit order. Entry orders, they consist of opening a position. Closing orders, they consist of closing a position. What is a bullish trend? An uptrend occurs if the price of a financial asset moves up for several minutes, hours, days, months, or even years. For example, if a company's stock rises in price for 2 years, we can say that the stock is in an uptrend. In the example that we have in our presentation, the price of a financial asset moves upwards for a long time, creating a succession of rising highs and lows. So what is a bearish trend? A downtrend occurs when the price of a financial asset moves down over minutes, hours, days, months, or years. For example, if a company's stock falls in price for a year and a half, we can say that the stock is in a downtrend. In the example that we have in our presentation, the price of a financial asset moves downward for a long time, creating a succession of decreasing highs and lows. Trading sessions. A trading session is a period of time consisting of 1 business day in the financial markets. Depending on the main financial centers that operate, The market hours can be divided into 3 trading sessions: the Asian sessions, Tokyo, the European session, London, and the American session, New York. Asian session. It is one of the 3 main trading sessions, opening at 00:10 Eastern European Summer Time and closing at 10:00 Eastern European Time, 11:00 Eastern European Summer Time, during which the market operates through financial centers in Japan, China, Australia, New Zealand, and Russia. The most traded currency during the Asian session is the Japanese yen. Asian session. It is one of the 3 main trading sessions, opening at 00:10 Eastern European Summer Time and closing at 10:00 Eastern European Time, 11:00 Eastern European Summer Time, during which the market operates through financial centers in Japan, China, Australia, New Zealand, and Russia. The most traded currency during the Asian session is the Japanese yen. European session. It is the trading session that operates through financial centers in Paris, Frankfurt, Zurich, and London. The most active currencies in this session are the GBP, the Euro, and the CHF. The European session opens at 9:00 Eastern European Time, 10:00 Eastern European Summer Time, and closes at 18:00 Eastern European Time, 19:00 Eastern European Summer Time. North American session. It is a trading session that opens at 14:00 Eastern European Time, 15:00 Eastern European Summer Time, and closes at 23:00 Eastern European Time, 00 Eastern European Summer Time. It is dominated by US trading, with additional trading from Canada, Mexico, and South America. And finally, in this small instruction to Forex, where we saw the important points so that you can understand what Forex is. What is a pip? As a general rule, a pip in Forex is a move to the 4th decimal place in most currency pairs. Pips are a standardized value for all brokers and trading platforms, so it is very useful as a measure that allows each trader to always communicate with the same terms without confusion and with ease. Calculate pips. The value of a Forex pip is related to the size of the contract, or volume of lots, open in the foreign exchange market. By default, the value of 1 pip in Forex designates the value of 1 pip for a contract of a standard lot. That is, for a contract with a nominal value of 100,000. The pip value is always expressed in the currency pair's counterparty currency, i.e. the currency to the right in a parity, or the quote currency. For the next video, we will see topics like types of analysis in Forex. I hope you liked the class and see you in the next class of our Forex course.